If you look at this chart and you don't feel suspicious, you aren't paying attention. What we are looking at is an anomaly that technically shouldn't exist. On one side, COTI is celebrating over $10 billion in trading volume on their new PriveX exchange. That is Tier 1 exchange volume. That's massive. But on the other side, DeFi Llama reports the total value locked is $1.3 million. Think about that. 10 billion in flow, 1 million in liquidity. In the traditional laws of decentralized finance, this is mathematically impossible. It usually screams wash trading, bot activity, or a complete fabrication of data. It looks like a classic ghost chain, a network where tokens move back and forth between empty wallets to create the illusion of life. And the price action agrees with the skepticism. We are sitting close to 1 cent. This asset has been absolutely decimated. We are down over 97% from the highs. Even the seed investors are underwater. So, why are we even talking about this? Why haven't we just marked this as dead and moved on? Because there's a chance, a small, specific chance, that we are misinterpreting the data. What if this isn't a scam? What if this is a completely new type of market structure that renders total value locked obsolete? Today, we are going to strip away the marketing hype. We're going to look at the ugly truth of the chart, dissect this mystery volume, and decide if this is a distressed asset worth a contrarian bet, or if it's just another altcoin bleeding out into irrelevance. Before we get excited about any comeback story, we need to be honest about the damage. The chart you are looking at is a crime scene. This is the weekly time frame for COTI. If you bought the top in 2021 at 69 cents, your capital has effectively evaporated. This isn't just a COTI problem. This is the reality for 95% of the old guard altcoins in this cycle. They are trapped in what I call zombie mode. They have valid tech, they have teams, but they have zero attention. The retail crowd isn't here. They are chasing memes on Solana or gambling on Base. But here's the data point that separates COTI from the typical rug pull. Look at the vesting prices. Seed investors paid 6 cents. Private round investors paid 8 cents. Public sale was 6.5 cents. Do you understand the psychology of that? Usually, when you analyze a token, you are terrified of venture capitalists dumping on you because they are up 50 or 100 times on their investment. Here, the VCs are down big. They are trapped. They are bag holding right alongside the retail investors. This creates a weird dynamic. The profit-taking sell pressure is gone because there's no profit to take. Everyone left is either a long-term believer or a stuck investor praying for a break-even exit. This creates a potential floor, but it also tells you how poorly this asset has performed. It has underperformed its own private valuation. That is a massive red flag that we cannot ignore. Now, let's address the elephant in the room, the volume versus TVL divergence. In a standard automatic market maker like Uniswap, you need liquidity providers to deposit tokens into a pool. If there is only $1 million in the pool, you cannot trade $10 billion of volume without causing massive slippage. It's impossible. So, is COTI faking the numbers? Not necessarily. The answer lies in this tweet from the team addressing the FUD. They mention rapid mint-to-forward cycles and tokens allocated to market makers. This confirms that PriveX is not a standard DEX. It's an intent-based exchange. Here's the difference. On Uniswap, you trade against a smart contract. On PriveX, you trade against a solver, a professional market maker. When you submit an order, you aren't touching on-chain liquidity. You are shaking hands with a market maker who then instantly hedges that trade on a centralized exchange like Binance. That explains why the on-chain TVL is dead. The biggest liquidity pool on-chain has less than $200,000. You can't trade size there. The 10 billion volume is happening in the black box of the solvers. So, is it real? Mechanically, yes. The volume represents real orders being routed. But is it safe? That is the wrong question. The right question is it decentralized? No. You are trusting that these market makers will keep quoting prices. If the solvers decide to leave, or if their Binance accounts get frozen, the exchange stops. This is not unstoppable code. This is a brokerage service built on top of a blockchain. And this leads to the pivot. They see the payments narrative is dead, so they are pivoting decentralized AI. They are integrating OpenAI and Gemini to allow AI agents to trade privately. It's a smart pivot. But let's be cynical for a moment. Every dying project in 2026 is pivoting to AI. Will the market care before the money runs out? Now, let's let the chart speak. And the chart is telling us one thing: pain. Price has been trapped in this descending channel for years. This is what I call a torture chamber. It bleeds you out slowly. Every time bulls get excited, they get rejected at the top of the channel. Every time bears get greedy, it bounces off the bottom. Look at the exponential moving averages. This is textbook bearishness. We are trading below the 10, the 21, the 55, the 100, and the 200-week moving averages. Every single one of these lines acts as dynamic resistance. The 10 and 21, those blue lines, has been swatting price down relentlessly. Until we can close a weekly candle above the 21 EMA, there is no trend reversal. None. Any pump you see is just a dead cat bounce until proven otherwise. Now, look at the levels. We have broken through the golden pocket. We are currently hanging on by a thread at the lower support of the channel. The next major Fibonacci extension, the 2618, is at 1 cent. This is the line in the sand. 1 cent is psychological. It's the launch price. It's the final support. If we lose 1 cent, we enter price discovery to the downside. That means there is no historical support left. The floor falls out. The only flicker of hope here is the Heikin-Ashi RSI. It is deep in the oversold territory. Historically, when the weekly RSI is this beaten down, the sellers are exhausted. They have run out of ammo. This often precedes a relief rally back to the mean. But oversold can stay oversold for a long time. Do not mistake cheap for value. So, how do we trade a chart that looks this terrible? We treat it for what it is: a high-risk volatility play. This is not a marriage trade. This is a date trade. We are here for a good time, not a long time. I am looking at this green box for my entry strategy. Why here? Because the risk-to-reward ratio is mathematically perfect. We are sitting right on top of the invalidation level. My stop loss is tight. I'm watching for a weekly candle close below the channel support. If we close below it, the thesis is dead. The black box didn't work. The AI pivot failed. I'll cut the position immediately. There is no point diamond-handing a breakdown into the abyss. But if the narrative sticks and we get that RSI bounce, I'm not aiming for the moon. I'm aiming for structure. Target 1 is 3 cents. That's the 1618 fib. That is a 2x from here. If we hit 3 cents, I'm taking significant profit. Target 2 is 6 cents, the seed investor break-even price. Target 3 is at 9 cents, right on the top of the channel. And as for target 4, which is tricky to think about right now, it's at 19 cents, which is the local high in December 2024. We also need to watch Bitcoin. If Bitcoin loses the $80,000 level, alts like COTI will get crushed, even more. In that scenario, I'll flip short. I'll short this crap down to 1 cent. To wrap this up, the $10 billion volume on COTI is likely not a scam, but it is highly centralized. It proves the tech works, but it doesn't prove the project is healthy. We are looking at a token where early investors are underwater. The chart is in a multi-year downtrend, and the only spark of life is a pivot to AI. Is it a safe investment? Absolutely not. It has performed poorly for a reason. Is it an asymmetric trade setup? Yes. Buying at the absolute floor with a tight stop loss offers a classic limited downside, high upside scenario. But keep your position size small. This is a lotto ticket, not a savings account. I'll be posting my exact entry and exit alerts for this trade in my free Telegram group. If you want to see real-time market insights, join us there. The link is in the pinned comment. Trade safe, protect your capital. My videos are never financial advice, and I'll see you soon in the next one.